to South Central with me, Jude Sannith. This is the show where we report and break down all the news across the 5 southern states and what they mean for markets, India and South India Inc. It's an action-packed bulletin today given the recent developments in the India-US trade deal. We'll take stock of all that and more. But first, let's take a look at the headlines we're tracking at this hour. As Prime Minister Modi and US President Donald Trump signal the start of a trade deal and a reduction in tariffs on Indian goods, garment exporters in Tirupur and the electronics ecosystem say there is reason to cheer. Amid lingering questions over details of the deal itself, Commerce Minister Piyush Goyal tells Parliament that both India and the US are working together to cover technical aspects of the deal. He adds that the agriculture and dairy sectors will be safeguarded. Kerala and Karnataka state assemblies continue seeing disruptions. The BJP and JDS want answers for the alleged excise scam in Karnataka, while opposition members of the UDF in Kerala demand a charge sheet in the alleged Sabrimala gold theft. At the Tamil Nadu Global Tourism Summit, Brigade Hotel Ventures Limited inks an agreement with the state government as the company readies an investment of 1,100 crore rupees in 3 new properties and 500 keys in Chennai. As the centre targets 5 million metric tons of green hydrogen capacity by 2030, can South India turn into a production hub? On the show today, Bengaluru-based engineering company Uttunga will weigh in. On to our top story first. If the India-EU FTA was described as the mother of all deals, some writers might probably describe this one as its grandmother. After all, since August 2025, multiple sectors across the country were impacted by way of the infamous Trump tariffs. Let's revisit that again. 25% reciprocal tariffs were levied by the US on India and an additional 25% penalty tariff on top of that for the country's patronage of Russian oil. Almost overnight, the Trump tariffs threatened to impact export-heavy industries like textiles from Tirupur, the seafood export industry from coastal Andhra, and even sectors like gems and jewelry and engineering products. A couple of days ago, Prime Minister Modi and US President Donald Trump said that India and the US would arrive at an understanding that would restore trade ties between both nations. In fact, President Trump said that tariffs on India would be brought down to 18% from 25% without mentioning that penalty of 25% as a tariff for patronage of Russian oil. But under this understanding, Trump claimed that India would cut off its Russian oil purchases and import from the US and Venezuela instead. Now, back home in India, the deal is being seen as a breath of fresh air and pure relief. In Tirupur, for instance, the Trump tariffs were a roadblock to order flows and saw garment manufacturers having to revisit and redraw business projections. According to state government data, Tirupur was losing an estimated 15,000 crore rupees in export orders, especially given that Tamil Nadu accounted for 28% of the country's textile exports. Another sector that's all set to benefit and perhaps even hit the growth trajectory is electronics. A statement by the India Electronics and Semiconductor Association said, and I quote, "The deal will accelerate semiconductor design and manufacturing, boost electronics value addition, and expand cooperation across AI, data centers, and advanced manufacturing," end quote. So to find out how the deal will impact Tirupur as well as India's electronics exports, I spoke to KM Subramanian, President of the Tirupur Exporters Association, as well as Ashok Chandak, President of the India Electronics and Semiconductors Association. Here's more from that conversation.
Thank you, Trivedi. Thank you for this opportunity. And it is a historical trade deal, we can say, which is the lowest among our competitive countries. Tirupur is one of the cluster. It is an apparel export cluster. We are 68% of our knitwear export is going from this small town. And we are giving a job opportunity of 1 million people all over the India. Today is a very good day, and we are very happily welcome this historical trade deal. And because of this, this business will boom. And we have two good news. One is EU FTA and this tariff reduction. These both are very need of our industry, and we are very happy.
Absolutely, absolutely. In fact, let me come on to you next, Mr. Chandak. In fact, what does the trade deal now mean for electronics exports from India? You heard from the Tirupur Exporters Association. It's good news, no doubt, given India's textile exports volume. But electronics is no different. In fact, India exported $29.12 billion in electronics in FY24, a figure that went all the way up to $38.58 billion just last fiscal. So tariffs, I'm sure, must have caused some derailment to this growth trajectory. But can electronics exports now bounce back, Mr. Chandak?
I would say it's not only a question of bounce back, it is already on an upward trajectory. And right now, with this deal, it restores confidence, reduces the risk and uncertainty, and unlocks the next phase of the growth. India's semiconductor manufacturing is stepping up. So is the electronic component manufacturing system is stepping up. So that way we are able to do a much more value addition and make the electronic products, basically. Now, this particular situation I would call is a very good strategic reset, where India's position will be enhanced further globally and particularly for exports to US. And I would call it a double engine effect in a short span. We recently did the EU FTA and now this deal. Everything adds up actually towards the competitiveness of the sector and also the opportunity and the local companies putting it there. I want to add one point here, Jude, is, right now, because of the Section 232, there was a concessional tariff or no duty for smartphone exports or semiconductor exports, but that was still a hanging sword. You never know when the things would change. So now having this clarity is very important. It would reduce the uncertainty and no hesitation in the American and Indian companies to collaborate and take it further. So we will see this is a competitive advantage. Also, the duty aspect, Vietnam is at 20% today.
I hear you there.
18,
in fact, as far as overall, both textiles and semiconductors are concerned, big businesses from South India, no less in Tamil Nadu itself. I think the lack of uncertainty is the big takeaway with regard to the deal itself. In fact, coming back to you, Mr. Subramanian, should Tirupur now consider itself as more competitive than the likes of a Bangladesh, Vietnam, or Sri Lanka, for that matter, in terms of being a lucrative export base for textiles? How will this now help reverse some of the most adverse impacts of the tariff? Because not too long ago, we were reading reports of a 1.5 lakh job loss figure and a 12,000 crore rupee revenue impact by way of suspended export orders. Will these statistics now be offset and perhaps even reversed, Mr. Subramanian?
Yeah, we are a cluster. As a cluster, we are doing around 45,000 crores export in the city, out of which 30% is a USA portion. So we are doing around 12,000 to 15,000 crores to USA market. 50% of the orders was very slow down for the last 3 months. Because of this deal, this will again come up and we are going to double the business in next 3 years. And yes, our competitive countries are a little bit higher. Bangladesh is 20%, Pakistan is 19%, and Indonesia is 19%, Vietnam is 20%. Whereas ours is less compared to that 1%. So the import duty is common for all. It is 17%. So our competitive edge is we are very safe now. We are very lower than all our competitive countries.
Absolutely. Coming back to you, Ms. Chandak, pardon my sobriety at a time when I know that there's just general cheer all around, but I sometimes wonder, is the deal at this time in place, at least with information that we're aware of, really all that good news for Indian manufacturing? As per President Trump's tweets, India has agreed to buy over $500 billion in US energy and technology. So will this now throw a spanner in the works of domestic production in electronics, given the fact that, at least from what we know, the country has committed to a pretty large import bill from the US alone? So do the numbers add up really, Ms. Chandak?
obviously, yes, as you said, it is not a question of spanner in the work, but I would call it is a more of a strategic enabler. And I would explain how. This purchase is for energy, technology, and other products, not just the technology products. Now, how does it help? It helps to strengthen our supply chain because now it will facilitate the smoother flow and import of the capital equipment, advanced packaging, even AI, GPUs. We could also work on co-creating technologies and co-development models, etc. So this is actually an enabler. And particularly for electronics, we see that the US origin equipment, the IP, the EDA tools, the advanced chips and materials, they strengthen our manufacturing ecosystem rather than displacing it. And with our additional impetus on a PLI, ECMS schemes, component related, ISM 2.0, they are going to help us to create better value addition, localization, and make us much more competitive and export ready, supported by such a reliable access to the technologies from US. So overall, I do not see this as a spanner, but I would see this as an enabler. But yes, that $500 split, $500 billion split, we have to look into.
Yeah, right. Absolutely. In fact, if we can get those synchronizations in place, no doubt this could have the potential to be a path-breaking deal of sorts. So, Mr. Subramanian, let me come back to you and perhaps let you have the last word. I just asked, the IESA president as to whether or not there could be a spanner in the works in terms of India's commitment to a large import bill. So let me ask you, do we have complete clarity on the contours of the deal yet, at least as far as the textile exporters are concerned? I know for a fact that the Textile Exporters Association is still grappling over whether or not the deal will include that pre-tariff import duty of 17%. So does this lack of clarity continue to cause some concern for you in Tirupur, Mr. Subramanian?
It is. We are waiting for that, and probably today or tomorrow we will get some full clarity. And so far we received only the duty structure, and the import duty is 17% so far, but clear picture will come on today or tomorrow.
Okay. Right. Well, it's definitely something to celebrate, this path-breaking India-US trade deal, but the fact remains that a whole lot of clarity needs to be achieved before the celebrations could well continue. But for the moment, good news, no doubt, for both the textile export sector as well as the electronics and semiconductor export sector there. So, Mr. Subramanian, Mr. Chandak, thank you so much for joining us and breaking down some of those insights and reactions to the India-US trade deal. Great speaking to you, gentlemen, as always. Thank you so much for joining us on the broadcast.
Thank you.
Well, India Inc. may be celebrating the breakthrough in India-US trade ties, but multiple questions continue to remain. For instance, what becomes of the 25% penalty that the US imposed on India as, for the country's patronage of Russian oil? How does India manage to commit to $500 billion of US imports when the country's total import bill for goods is only about $700 billion? In fact, Congress MP from Tirunelveli, Shashi Tharoor, has demanded for more clarity from the government on exactly these lines. In fact, earlier today, Commerce Minister Piyush Goyal also clarified some of these questions in Parliament. He said that both the US and Indian sides are working together to cover technical aspects of the deal. He added that the interests of farmers and dairy farmers would be protected. Let's listen to what the minister said.
मैं माननीय सदस्यों को सूचित करना चाहता हूं कि आगे की कार्रवाई के संदर्भ में दोनों पक्ष व्यापार समझौते से संबंधित आवश्यक तकनीकी प्रक्रियाओं को पूरा करने और कागजी कार्रवाई को अंतिम रूप देने के लिए मिलकर काम करेंगे ताकि इसकी पूरी क्षमता का शीघ्रता से लाभ उठाया जा सके। समझौते की विस्तृत रूपरेखा इन प्रक्रियाओं के समापन के पश्चात तुरंत घोषित की जाएगी। माननीय सदस्यों को भारत के ऊर्जा स्रोतों से संबंधित उन मुद्दों की जानकारी होगी जो इस समझौते पर हुई चर्चाओं के दौरान उठाए गए हैं। मैं स्पष्ट करना चाहता हूं, जैसा कि सरकार ने कई बार सार्वजनिक रूप से कहा है कि 140 करोड़ भारतीयों की ऊर्जा आवश्यकताओं की सुरक्षा सुनिश्चित करना सरकार की सर्वोत्तम प्राथमिकता है। वस्तुनिष्ठ बाजार स्थितियों और बदलते अंतर्राष्ट्रीय परिदृश्यों के अनुरूप ऊर्जा स्रोतों में विविधता लाना हमारी इस कार्यनीति का मूल आधार है। भारत की सभी कार्रवाइयां इसी बात को ध्यान में रखकर की जाती है। अतः मैं माननीय सदस्यों से इन मुद्दों को समुचित दृष्टिकोण से देखने का आग्रह करता हूं।
Opposition is only asking for clarity. We don't know what the deal contains. We have Mr. Trump's tweet and we have Mr. Modi's tweet. Is that enough in a parliamentary democracy? Shouldn't the government come and explain to the people of India what's in the deal? We have no idea. Mr. Trump says agriculture. So what are the protections for India's farmers? Mr. Trump says 500 billion. Our entire import bill is 700 billion. So are we going to stop buying from every other country and only buy from America? We need clarity. That's all. We just want to know. We would love to celebrate good news if it is good news. But please give us the details and we know whether we should celebrate.
In fact, staying with action from Parliament itself, the Centre told the upper house of the Parliament that it has in fact stepped up efforts to cut the cost of green hydrogen as part of its push to make India a global production and export hub. In fact, Minister of State for New and Renewable Energy, Shripad Naik, in his written reply to the Rajya Sabha, said that measures under the National Green Hydrogen Mission included big incentives for electrolyzer manufacturing and green hydrogen production, making mention of the many projects that were sanctioned. The centre's move comes as India aims to scale its green hydrogen capacity to 5 million tons a year by 2030. In fact, to speak to us about how this could impact production in South India, I am now joined by Dinesh Tukaram of Bengaluru-based engineering services firm Uttunga. Dinesh, firstly, thanks so much for joining us. My first question to you, were you initially a bit disappointed that despite the economic survey highlighting a push towards green energy in this year's budget, the allocation for green hydrogen largely remained unchanged at 600 crore rupees with little or no mention of new policies, schemes and initiatives? Is there a discord there that you were kind of disappointed by?
Yeah, thanks Jude for having me in this. Yes, absolutely. So though the intentions are right and the vision is in the right direction, but the allocation doesn't somehow resonate with that. Again, hydrogen being very new and there are still a lot of investments happening to make it more economical. And there is a need for reducing the generation and the adoption, as well as there is a need for creating a demand. So there has to be some incentives and some enablement done on the demand side also. So keeping all these things in perspective, expecting there was an expectation that probably we would have a little more budget there, and then of course when we see the other areas like we see around 90 to 95% of allocation for solar energy as part from the MNRE funds, which again creates a little bit of confusion around when we have so much of allocation for something which has been already matured. Why not something more for hydrogen to create a diversified energy portfolio? And
no, absolutely, and the disappointment is very understandable, Dinesh. And I completely get the point. But you know, given the fact that the government is now looking to not only cut the cost of green hydrogen in India by 2030, but also ensure capacity of 5 million ton by 2030. So you're seeing lesser or unchanged allocation on one front, but a very forward-looking MNRE projection of 5 million ton capacity by 2030. Do you see production opportunities for green hydrogen now emerge within South Indian hubs, and which ones would these be?
Yeah, absolutely. And I think it's known that we already have a port in Tamil Nadu which is recognized as a green hydrogen hub. And South India also been very fortunate to have all the resources required in terms of wind, water and solar. So therefore, definitely we see that there is a lot of opportunity for South Indian to have more hubs. And we already have, I think, 4 states of the top 10 states with installed renewable capacity comes from South. So, which is an evidence that there is a lot of opportunity here. And then being one side is the ability to generate the renewable power. On the other side, we also see that we have good industrial hubs across Tamil Nadu, Andhra, Karnataka. And then also we see a lot of industries around refineries, fertilizers, which are going to be the consumption of these energies. And so therefore, definitely there's a right ecosystem here, balance of both the source as well as the demand in South India. And we expect that there will be more hubs coming up in South India to actually take this, to utilize these renewable energies and help our industries here to be more productive and effective, and also be very environmental friendly.
Absolutely, and that's the hope for everyone, that South India continues in its production journey as far as green energy is concerned. But quickly getting back to the budget itself, industrial decarbonization received a massive push with a dedicated allotment of 20,000 crore rupees for carbon capture, utilization and storage technologies. What does this focus now mean for India's decarbonization journey, and what kind of impact do you expect in this space, very quickly?
Actually, it's a very good news around good amount of allotment for carbon capture and utilization, and definitely I think since we can't do anything different in the existing industries using the existing technologies in their production process, so the only way out is to have a very robust carbon capture systems in place, and this is going to help us to create a lot of new technologies and mechanisms to capture the carbons from the existing industries using the existing technologies, and of course help to create some new technologies for the upcoming new industries. And we also have to see how to utilize this the captured carbon in terms of both storage and utilization. And there again, we see that right ecosystem of utilization also shaping up. And this allotment will definitely help us to create that circular carbon pathways, which will help to completely have that 360-degree mechanism of capture, reuse, storage, and utilization. And with this allocation, we also see that, yes, this may motivate to come up with new technologies and new mechanisms to the existing industries and the new industries, which would create its own ecosystem for the markets, and also help the market, the manufacturing competitiveness in our industries, and create more jobs.
Absolutely. Absolutely. More jobs and the emergence of a new market, I think, would be the best news in this space, one that's looking up for the near to medium term. On that note, Dinesh, great speaking with you. Thank you so much for joining us here on the broadcast and breaking down some of those insights.
Yeah, thank you.
Well, on that note, we'll have to slip into a really short break. But on the other side, more news and updates from South India when South Central returns. Keep staying tuned to ET Now for more. Welcome back. You're watching South Central with me, Jude Sannith. This is the show where we break down all the action from South India, from the markets and beyond. Moving on to some political action now. It was pandemonium at both the Karnataka and the Kerala assemblies as opposition members in both houses stormed the floor of these houses, questioning the government over multiple controversies that have plagued the day across both states. In Karnataka, BJP and JD members staged an overnight protest at the assembly demanding answers from the government over allegations levied against Excise Minister R.B. Tirupur. Remember, members of the Karnataka Wine Merchants Association have alleged that hefty bribes amounting to crores of rupees were being demanded in exchange for CL4 licenses in the state. The association named the Excise Minister in their complaint. Meanwhile, in Kerala, opposition members in the UDF disrupted assembly proceedings for a second day in a row over the alleged gold theft in Sabrimala. Led by Congress members in the assembly, the UDF disrupted proceedings and questioned as to why a state-constituted special investigations team had not filed a charge sheet in the matter. Well, that's about all the time we have on this edition of South Central. Thanks so much for watching. We'll be back with more news and more, same time, same place. In the meanwhile, keep watching ET Now for more news and updates.